Okay, this time we're going to go through this problem, and this problem uses the absorption method. It says the company Sassy Soprano produced 90,000 units this year and sold 80,000 units. Each unit sells for $90 each. The following costs were incurred, and it gives you the costs. And it tells us to calculate the production cost per unit on the absorption costing method and prepare a multi-step income statement for the year ended March 31st. Okay, so I've already got over here in Excel all the things that we need, so let's plug in the amounts that they gave us. Direct materials was 900,000. Direct labor was 1,980,000. Variable overhead was 765. Oops, one too many zeros. And fixed overhead was 450. Okay. And then we need to divide each one of those by the units produced. Under the absorption method, we're dividing by the units produced. So 90,000 units for each one of these. I'm just going to copy that down. And then we just have to divide. I'm going to take the 900,000 and I'm going to divide it by the 90,000. So I got $10 per unit. And I'm just going to copy that all the way down. $10 per unit for direct materials, $22 for direct labor, $8.50 for variable overhead, and $5 per unit for fixed overhead. Okay. Then we have other variable costs is the sales commissions. Everything else is fixed. So it doesn't tell us the total amount, but it says sales commissions are $20 per unit sold. So we know the per unit amount. And we know the number of units sold was 80,000. It gives us to it right here, sold 80,000 units. So this one we're going to work backwards. We're going to multiply these two to get the total sales commissions. So 80,000 times $20 per unit gives us sales commissions of 1.6 million. So what is our absorption cost per unit? We can just take all these and bring them down. 10, 22, 850, and 5. So our total production cost per unit under the absorption method is $45.50. And now it asks us to create an absorption costing income statement. So we're going to go through that process. Our sales were $90 per unit and we sold 80,000 units. So 80,000 times $90 per unit, oops, gives us $7,200,000 worth of sales. What was our production cost? We already calculated it's $45.50 per unit. So we're going to take the 80,000 units we sold, multiply that times $45.50. So we get $3,640. $3,640,000 of production costs. So what's our gross profit? Gross profit is always sales minus cost of goods sold. So we're going to take the sales and subtract the production cost, or cost of goods sold, and we get gross profit of $3,560,000. We already figured out what our sales commissions were up here. They're $1,600,000. Our sales salaries are given to us in the problem. They're $500,000. So our total selling expenses would just be these two added together. $2,100,000. Okay. And our fixed administrative expenses, it gives us $850,000. So our total expenses are going to be the $2,000,001 plus the $850,000. And our net income is going to be our gross profit minus our total expenses, $610,000. So that is an absorption costing method income statement. It's a little bit different than what we've looked at before. This is absorption costing. The other way is variable costing. Okay? Because this only includes the fixed overhead. The variable also would include the variable overhead. I'm sorry, this includes both. Sorry, got it mixed up. This one includes both the variable overhead and the fixed overhead. The variable costing, of course, would not include the fixed. Okay, because it's variable costing. It's just the variable costs.